Welcome to our presentation on industry analysis. Specific today we are discussing about cigarette sector. The company listed in the Jakarta or Indonesian Stock Exchange. All analyses are calculated by using our stock valuation calculator. Today we are discussing about three companies in cigarette industry: Sampurna, Gudang Garam, and Bentul. We have one company, British American Tobacco, but already delisted. This sector was prima donna some years ago, maybe in the 90s, a time before health awareness is not yet increasing around the globe as today. At that time, the sector spent so much money, budget in the advertising campaign for many events in Indonesia. We have briefed the cigarette analysis in the some caption like you see in the slide. We're trying to make it brief for you that we can summarize Sampurna, Gudang Garam as a strong performances historically since first generation of the family. So the legacy is very strong, life and business philosophy also. Their productivity are still high with reducing capital investment and quite consistent. Even though since anti-smoke being introduced or spread out around the world, they also have a strong effect, reduce growth, reduce advertising spending, sold out to big guys like Sampurna, to Philip Morris, who ran Marlboro cigarette. As you know that around in the Western, US, Europe, and some Asian countries, the restricted on the smoker is very wide and then very restrictive. So the other unwilling to sell out to the other big guys or the global player. They are more conservative. Maybe they just take a loan in the form of a convertible bond to equity, at least to maintain size and growth. Although local market is still promising because despite anti-smoke campaign, because anti-smoke campaign here is not as easy as implemented in US or Europe. Okay, let's talk about the financial of the best company in the cigarette industry. It is Sampurna, Hanjaya Mandala Sampurna. You see, after several years acquired by Philip Morris, the company succeeded in keeping the growth stable, even increasing in the smaller rate. Well, despite some unfavorable in the period of 2012, but they pick up again. You see the quarter one is went down a bit and then keep increasing, and then the closing 2012, they are the growth is quite big compared to 2011 and 10. So the company is enjoying the very productive company, or a very lucrative business. They maintain its growth, and then for value also increasing, the true value, intrinsic value, earning after tax, the net income maintain above 20%, capital expenditure kept stable at around 700 to 800 billion rupiah per year, but producing double digit or above 20% growth in the net profit. So with this good productivity, it's later on produce the free cash flow that increasing over time. This is sign of a good performance despite liquidity of stock. So how about the balance sheet? It's also show a strong balance sheet. The liquidation value can be maintained always positive, around 800 to until 1000 rupiah per share. On drop is only temporary in Q2 and Q3 2012, but in the last quarter, quarter 4, they are back on track again, even quite increasing in number, above 1000 rupiah per share. Company enjoy very strong position, and then also very strong to face against any crisis upfront, both in terms of balance sheet and cash flow. You see the profitability, gross margin kept at 28-29% rate. Profit margin also quite stable in the 15% rate. They always pay dividend and trade more than 60%, and debt to equity ratio below 1. So very effective and promising. Again, it's despite its liquidity. Let's move to the second biggest cigarette company, Gudang Garam, GGRM. It's also family business with strong legacy until today. They successfully implemented business philosophy and a work ethic to the descendant, to the next generation. And Gudang Garam actually is slightly bigger than Sampurna in terms of asset, but much lower in terms of revenue. The revenue is decreasing over time, is below 20%. Sampurna is much higher than that. So we show that bigger asset becoming a liability in the later years if they cannot able to produce, because it show a weak profitability, the bigger asset, but they cannot move very fast. The more bigger its asset, the slower it runs. So it is is contradictory to the Sampurna. They maintain the smaller asset, but run is much faster than Gudang Garam in terms of the turnover. Well, looking at the revenue growth is below 15% in average. It's much lower than Sampurna, but it's keep decreasing over time also keep increasing though. On the other hand, earning after tax is different. In 2012, they are decreasing, went down quite deep actually, quite deep compared to year before, 2010 2011. They are decreasing in every quarter, unable to maintain the growth, and worse is capital expenditure. They are invested keep increasing but producing slower, not slower growth, negative growth actually. Let's see the balance sheet of Gudang Garam. Although they keep a stronger balance sheet, liquidation value always in positive, but strong balance sheet, strong liquidation value is not much use or much of advantage without growing a bottom line. So company must think to utilize its cash to be allocated elsewhere in more productive way, of course, because if they just keep much cash internally without producing good bottom line, so they will be unproductive and later on will be a liability for the company. So whether they have to find a good opportunity elsewhere, they can revamp or restructure the current business. Let's say installing a new leader, new professional, rearrange, restructure organization, maybe strengthening the sales force, sales organization, using new technology, new strategy, and etc. The company margin is actually only half of Sampurna. Although debt to equity ratio is still the same, below 1, and still keep paying out dividend even at the lower rate below 50%, but its bottom line is much lower. Alright, let's see the smallest one out of three. There is a Bentul International Customer. In terms of size, asset and revenue is much lower. Is 1/5 of the competition. Asset only 7 trillion is much lower. Bentul suffer negative growth during all quarter in 2012, and Bentul suffer losses also in all quarter 2012. So they are in the quite difficult position, and they are at risk if they cannot recover in a year after. How they can make a profit given the competition very stiff, and this mob campaign becoming spread out in local market. All in all, they make the free cash flow negative. On other hand, capital invested still maintain at the level of 300 to, well, at the end of, or then quarter 4 to 2012 is increasing to 400 billion, but producing negative bottom line. So the company is actually at risk if we are looking at the balance sheet. The liquidity is weak. Sometimes they produce a negative negative value in the 2012. There is show unable to face the crisis upfront. If the financial crisis may hit local market, or there is a change in the taste in the behavior of the market, so the company will be at risk, and then if they don't improve it, they may be facing a bankruptcy. So you see in this 3 years period, last 3 years period, the company is unable to reduce debt. The debt is still there. What they do is only restructuring, but without any improvement at all, because They produce negative growth, negative bottom line. It's just only buying time to, lighten up interest payment, interest expenses. But it doesn't give any help. Gross margin below 20%, and then profit margin is negative all the way into 2012. Although they still paying dividend, not from the losses, of course. They use the return earning, they use the cash on hand, cash on the bank. It's not wise strategy. It's just to please the shareholder. Later on, it's weakening its cash position. They cannot expand. They cannot finance operation. So you see the debt equity is above 20 is sign of risk. So thank you for your attention, and then we'll come back to you later on the other industry.